We are here with Haining Zha, about to delve into what's happening with China. I want to start with maybe just the highlights. I mean, if you look at the latest metrics coming out of China, I mean, I think the GDP is moving pretty quickly, the headline. I think, if I look at the markets, I mean, Shanghai's up 9%, Hang Seng's been doing pretty well. Like, things look really good, are they?
I would say there are some pull forward effect that makes people still worry about the second half of this year. For example, take export, for example. First of all, US and China deal with this trade war really, really well. So it's kind of counterintuitive. If there is one country that dealt with it particularly well, that is China. And they are adversary, being treated as adversary.
I think everyone's being treated as an adversary, but anyway.
Yeah, and looking at the first half of this year, when you're looking at for example, export growth, the overall Chinese export growth is still growing at 7% year over year. And the only country that is seeing the decline the only destination seeing decline is basically US, down 10%. All of the other region is growing. One of its biggest partner, ASEAN countries, as a bloc, they are growing at 10% year over year. Export to Europe growing roughly 4% year over year. Even Japan and Korea seeing some moderate growth. So, and also if you're looking at by product, the machinery and electronics, right now they are already 60% of the overall export. It is growing at 10%. So within the export sector, it is also having the structural change to move higher to the value chain. So overall, I would say in terms of export, China is dealing it pretty well. Now going to the consumption.
Yeah, domestic.
Domestic consumption, last year it was very soft, but this year benefited from the government subsidy and trade-in program. So far, it has been much better than last year. But the problem is some of the subsidy will be depleted soon, so which trigger people worry about the sustainability in the second half.
What about, I know deflation's on your radar too, and is that something that you're watching in terms of where the economy is going?
Yeah, deflation is certainly a big topic. So if you look at China CPI, it is hovering around 0. If you're looking at PPI, it is still negative. So China is certainly experiencing that deflationary cycle right now. But on the other hand, that's exactly the reason why the monetary policy has been very supportive. The fiscal policy is incrementally even more supportive.
Right.
And I think the only thing we worry about is in terms of monetary policy, people probably shouldn't expect to be, don't expect huge stimulus because the overall interest rate has already been low. If they further decrease the interest rate, then they basically will hurt the net interest margin of the banking system. And as we see from the European banking experience, that won't be good. And I think they could later on going on to unconventional paths and have QE and all that, but that really needs systemic shock for that to happen.
How is this all going to play out in the markets? I mentioned at the beginning that the Shanghai Composite has almost double digits this year, not quite. Hang Seng has done well. How is this going to translate in terms of Chinese markets and equities going forward? Yeah,
that is the thing I want to talk about. So when we hear things about the Chinese economy, you have the impression that they are mired in deflationary cycle. So for sure, for the Chinese equity market, it should be in bear market, right? But what I suspect is we are secretively going into a bull market. It is kind of go under the radar, unnoticed at this moment. But there are two metrics that I want to mention. Number one is the performance. So if you look at year-to-date performance, MSCI China or the Hong Kong Hang Seng market is basically generating 20% plus year-to-date return, outperform all of the other regions. US are roughly 10%, Europe also 20% in US dollar terms, but if you look in local currency in euro terms, half of that is coming from the currency gain. So if you're looking at local currency, it is also only around 10%, and Japan is basically flat in local currency terms. So it really outperformed. My second metric is the IPO activity. So this year, Hong Kong IPO market has experienced a revival. So year to date, the IPO volume is around 107 billion Hong Kong dollar. So in US dollar terms, that's about $15 billion. So US IPO volume is still higher, sitting around the first half of this year, around $27 billion. But if you look into the mix, about 12 billion is coming from SPACs, which is special purpose acquisition vehicles, not operating companies. So if you remove that, that is actually on par with the Hong Kong market. So, and we know the US capital market is a magnet of the global capital flow, right? So for Hong Kong to match that, that's kind of unusual.
I've only got about 45 seconds, so I apologize. What's driving this secret bull market, and will it continue?
Well, there are multiple drivers. For example, people seeing the AI innovation, the semiconductor breakthrough.
It's what's driving the US markets too at the same time.
Driving the US markets too, but the Chinese market, people don't expect innovation to come out of that space. But when they see it, then all of a sudden they want to re-rate that market.